With me now is Capital Network's financial services analyst, James Dolman. James, good afternoon to you.
Good afternoon.
James, we're talking Midpoint. They're Canadian listed. Why do you reckon investors should be considering them at the moment?
Yes, well, I think Midpoint at the moment looks quite interesting. First of all, Midpoint is a regulated foreign exchange P2P marketplace, so they're matching a cross-border foreign exchange trades at the midpoint rate rather than the typical bid-offer spread, which is quoted by most banks and foreign exchange counterparties. Worth knowing that Midpoint is regulated in both the UK and Canada with considerable operations in the UK. For clients of Midpoint, the benefits are very clear. They are financially better off crossing trades at the midpoint rate rather than accepting the bid-offer spread. For example, a £50,000 trade can realise gains of up to about £1,000. The target range for the company is trades in the size of $10,000 to $1 million, which in sterling is about £6,000 up to £600,000. So why should investors pay attention? Very interesting that MPT Midpoint is listed in Canada. It's the only financial tech startup that is publicly listed at the moment, which means that investors can get exposure to the growth of the fintech sector. Traditionally, venture capitalists get to invest only at this stage, and it's worth noting really that only 20% of venture capital firms are listed that are profitable.
All right, so that's quite a bit of the background there that you've given us and the appeal. Why specifically now? Why do you reckon investors should be sitting up and taking notice at this particular point in time?
Good question. Really, it's to do with the financial performance reported in recent results. They have got now threshold profitability, which was achieved in the second quarter of their 2017 financial year, which is to December. They are very solvent. They have cash on the balance sheet. And they've just completed a new financing round. And we are seeing positive sequential KPIs of volume, trade, and average value flows. And KGARs can often be up to 100%, with a range of somewhere between 50 and 100% across all of these KPIs. So taken together, I think the business has proved its business model and its strategy, and the performance is really reflecting that. And I believe there's further growth to go.
And speaking of further growth, where do you see those opportunities?
Well, at the moment, the growth has been very concentrated within the business-to-business P2P market, which is largely mid-sized, small, medium-sized enterprises and business clients from around 50 countries, which have had a need to convert commercial sums as efficiently as possible. We are seeing both repeat users and new users adopting the Midpoint platform, which has given us the growth to date, and we see this continuing in the future. Further out, we expect Midpoint will look to exploit the business-to-consumer market, roll out the services to financial industry as a wholesaler as opposed to a retailer currently, which means licensing and white label supply, and also looking at specific industry segments where cross-border payments are a key business area.
And finally, James, valuation, what have you come up with?
Yes, valuation is quite difficult. Valuation on both an absolute or intrinsic and on a relative basis are quite difficult due to the constraints of the profit visibility and also the level of profitability that can be achieved. I mean, we just don't know at what level. Is it 10% PBT margins or 50% margins, etc.? So having said that, we do know that the Midpoint is growing strongly, and we don't see any reason really why that should change particularly. Furthermore, 80% of the business is repeat client business, so we have some idea of customer adoption and preference rates. So with that in mind, we assume growth and we apply an asymptotic growth function to the rate of growth achieved so far, whereby we predict strong growth in the near future, but then slower growth later on. We then project this over sort of a 10-year period. And from this, we can easily estimate PBT earnings in Canadian dollars of 300,000 by 2020, which we would expect to revise up between now and that delivery year. So overall, high growth earnings should translate into a high growth PE, and high growth PE could be anything between 15 and 50 times, depending on which area of the market you look at.
James, appreciated. Thanks for your analysis.
Thank you very much.
Capital Network's financial services analyst James Dolman there talking through Midpoint.